Well, hello folks, I'm LA Little and this is your daily NeoTA wrap where we take a look at these markets and we do it from a neoclassical perspective, and each time ask ourselves what happened today and what does it tell us about the coming days. I do a show 4 times a week, every Monday through Thursday. We broadcast at 10 o'clock Eastern Time. It's archived on YouTube. You can get it there. It's under channel LA Little. You can subscribe to it, get it anytime, get updated reminders, tell you when it's available. As for the markets, it's breakout city, folks. Here we go again. We got the Dow breaking out yesterday. I kind of discounted the Dow breaking out because the Dow, it's 30 stocks and it's kind of hard to get your head, too excited about that. But today they stretched 100 points higher, 0.64. And you also had the S&Ps actually close at new highs, almost 10 points up, 2011.36. That's over the highs. You got the NDX coming up close, the NASDAQ coming up close. These are both pushing the top of the range now. The Russell's the only one that can't get going. It was up 0.5% today. Where else are you going to find red? Well, it's in the commodity markets, right? Oil, natural gas, just, look at them all. Copper. They all get hit. The only one that flipped around was gold and silver. Maybe they're just tired of going down. It's been about a month they've been going down. It's up and away, and it's kind of amazing, but it just keeps going. And if you look at this tonight, and you go home, you look at your screens, what you're going to see is breakouts, right? You're over the highs. This is gonna be a confirmed breakout tomorrow. It's going to be on volume. It's got the volume, and it's pushing up to the highs. It's going to actually set up, if we can push forward from here, it's going to set up some range trade breakouts. In this particular case, your range is there. If you project it up, right, it's about 31 points. Project it up, you can see what that range looks like. I actually did a show this morning anticipating this. You can read it here, breakout projections. I talk about them, talk about how they work, and in particular I talk about the range trade breakout, so go check that out if you have a chance. As far as what's next, it's all about, does this stretch? And the question of whether it stretches or not really is going to depend on whether these other two indexes can break out. And I'm talking about the NDX and I'm talking about the NASDAQ. NDX has a high of 41.10, almost 41.11. Closes at 41.03, so it's only like 7-8 points away from it. It's going to attack it tomorrow. And the IXIC, which is the NASDAQ Broad Composite, going to do the same thing. I mean, it's not that far away either. Top there is 46.10. This is at 45.93. So you're 7 points away here. The ranges on these, it depends on what you want to count as the range, because you actually had a false break that remember, it got flipped around on a takeaway bar here. That false break leads to the upside break. A lot of times they'll say, false moves lead to fast moves, and we got a fast move going on again. That false move back the other way, fast move back the other side. This thing's going to try to break out tomorrow. If you count the range, the small one, or if you want to count the big one, right, that large one there, it makes for a fairly large breakout to the top side. And you can count it another way. As you know, I only do 2 types of projections. I do range trades, breakouts, and I do ABCD structures. And so there's an ABCD structure, and if you do the calculations, you're going to be surprised, but they're going to come out about the same on both of them. And that's across most of these indexes, and that's another 2.5–3% higher. So we're not talking small numbers again. We're talking about another run, and in this particular case, it's September. We're coming in on the end of the month. It looks to me like they're going to try to push this thing right up until the end of the month, into quarter. That's the way this thing is set up. So the only one that's dragging is the Russell, and the Russell just can't even get over the breakdown bar. That top is 1160.06, and it's at 1159.27. It's pushing with volume, though. I suspect it will get over it, and the Russell will run back up as well. Now, if you get those range trade breakouts sticking and actually projecting, hitting their projection points, What you're probably going to see again is what we saw before, and that is that the Russell is going to try to work its way back up to the top while everybody else runs up to the new highs. This poor index can't get going. You know, I haven't tried to analyze what's in the Russell, but whatever it is, it's horrible because it can't get going. And it's been that way all year long. So that's the indexes. So if you look at the indexes, it says higher. If you go over and you look at the sectors, they almost all say higher. And I'm not going to dwell on them, but I will flip through them. Here's the IBB, you know, pushing up, going to try to go to the top of the range. And then we go to the majors. IYT got new highs yesterday, holds them today. The SOX, new highs today. XLB pushing the top of the range. XLF had volume last night. We talked about it would try again today. Well, it not only tried, volume expanded and it blows out the top. XLI, new highs. XLK, new highs. I mean, just go down the list, one after another. XLV, they're all the same. They're all highs. So from that perspective, this thing's going to just keep running, right? Everything's pushing now, and everything's pushing is pushing in a good way. I can't see these indexes not pushing the tops of those ranges on the IXIC and on the NDX tomorrow. And when they do that, if in fact they break out, you know, then you're going to see this thing try to extend, right? Because the extension is what you're always looking for. If you get that extension like you did on the Dow today, that suggests you're going to follow through, right? And it's going to actually go after projections. In the case of tomorrow, you've actually got a lot of things happening. You got the Scottish vote tonight. That Scottish vote looks like it's going to be a no vote, which is going to be viewed as positive. You've got the triple witching in the morning, where options expire on the open. That's going to create a lot of volatility in the morning. And you've got Alibaba coming out tomorrow. I thought it was actually today, but it's tomorrow. So you've got, you know, 3 things happening, all fairly significant, that are going to be trying to push these things all around tomorrow, and you're sitting right at the highs. The point of saying that is that you're probably going to see volume expansion tomorrow. And if you see volume expansion and we start pushing away, then everybody's going to want to jump it, right? Because here you go, you get volume expansion, new highs, got to get on board, right? Train's leaving the station again is the way it's going to be looked at. So, you know, from that perspective, they all look the same. Now, if you go to the other side of the curve, that is that you've got interest rates rising. You've got the world markets that could not lift before lifting, and I'm talking about Europe. The LTRs, the targeted LTROs started yesterday. Actually, the participation was quote-unquote disappointing, yet they went off without a hitch, and we got more money flowing into Europe. Europe has been up, and the rest of the world can't get going again. The only other one that's benefiting is the Nikkei and the Japan. You know, with the dollar strong, that's pushing the yen down. Now, you know, I still haven't been able to make sense of it other than rates. You're seeing the rest of the world can't get going, and I actually didn't get quotes last night. It looks like I'm getting them tonight, so we'll fill in the volumes that we're missing tonight. But if I look back here at the world markets, and if I pop into China, for example, we're missing the volume here yesterday, but you can see they can't get going. HSIC, the Hong Kong index, can't get going. These things have come off for a week and a half, and they are basically 2 weeks, and they can't get anything to the upside. I don't know, I can't attribute it to anything other than the currency moves. But whatever it is, it's pushing against these markets, and it continues to push against them. And it's right across the board. The All Ordinaries, of course, tied to them, but the only one that's moving in Asia is the Nikkei. Now, I would expect with breakouts tonight, these guys try to move, but still, something's wrong, something's weak, something's not looking very good. And you can look at it in a nutshell here with the EEMs. This is emerging markets. Got a bounce, sold it off, can't move, even on a day when we're breaking out. That suggests to me that these aren't going anywhere anytime soon. The retest regenerates, failed miserably, and so forth. So these are range trades at best. Maybe they're going to tread water while we go up a sky high again. All right, so wrap. What do we got tomorrow? Expect these markets to go up again. I mean, I can't see any other picture here. They got their breakouts, and we're probably going to see breakouts on the NDX and the NASDAQ Composite as well. As far as the world markets, they'll probably bounce. Europe probably bounces too, especially on the Scottish vote if it goes no. And it's up and away again. So let's turn our attention now to something a little bit different. And I want to look at interest rates, because we're seeing a fairly significant sell-off in bonds on the short-term basis. I'm going to use the 20-year as the first proxy to look at. And if we look at this, you know, we went from a high of 119.43 down to 112. That's 7 points. Percentage-wise, we were up, what is that, 119 divided by, I can't do the math that quick, but that's about 4% maybe, 3.5%, 4%. Here, let me pull up a calculator real quick and get it. Whatever the number, it's a fairly significant number compared to you know, how fast bonds typically move. I mean, they're kind of slow movers. It's not like they run to the upside, run to the downside that quick. Usually, they usually take a break on the way. Yeah, low is 112, so minus 112, and divide that by the top, 119. Yeah, so it's about 4.5–5%. So, quick move, right? The next question is, are they going to hold here? And when I look at what's here, and I look at these two intersections, right? And that's where they're at right now. They're trying to break it down. They don't have the volume, right? They look like they are going to try to bounce from here. That's what this looks like. Now, if I pull over the weekly chart and I look at the weekly chart, you're coming back into the swing point high. Now, it's not the first time it's been there. It's already retested and regenerated once, and it actually had volume there when it did it. That low is 113.05, and we're trading at 113.16. So we're right at those lows. If we did a full retest regen, that would take us down to the bottom here, which would actually take us into the support zone that you see there. Are we going to get that low? Are we going to come all the way back down into this area? Are we going to hold here? You know, it had some good volume coming back, right? We're coming into an area that probably should give us a bounce after a quick 5% loss. But this does look like it's going to have trouble coming back up. And whatever has caused these bonds to sell off, which, as I alluded to yesterday, it appears that what's caused these things to sell off is the fact that you've got interest rates moving up on the ideal that the Fed's going to move those interest rates faster and farther than we suspect, right? And that notion of Fed moving the rates higher is what's causing this selling. And that in these bonds, you know, and all across interest rate sensitive things. And it's not, you know, and when I say that, I'm talking about things that you wouldn't even think about that are interest rate sensitive. Well, I guess you would think about it, but they're not intuitive all the time. You know, like if you look at the XLU, for example, I didn't highlight that earlier, but the only two indexes that are struggling are the XLE and the XLU. XLE on commodities getting hit, XLU because of interest rates. You know, these markets are struggling right across the board on interest rates, and in particular, evidently, on the ideal that the Fed's going to raise rates faster than we think. Now, what's fascinating about that is the market still thinks it's fine. You know, I mean, the equity markets aren't being hit, even though I can't attribute this to anything other than the fact that interest rates are going up, right, based on the Fed. And if that's true, then why does it not affect the equities? Well, because the Fed has sold us on the idea that if they raise the rates if they raise the rates, this economy is going to be humming so fast that you're not going to want to sell the equities because they're going to go up even farther. I mean, that's the bill of goods we've been sold, right? I mean, that's what we've been told. That's what the market believes. The market believes this Fed is friendly, will stay friendly until the end of time. Now, the only way, in my opinion, that changes is going to be when the Fed missteps. In other words, the Fed tells us one thing and the economy does another, and it does it in a larger way. For example, let's say that the Fed starts to raise those rates and they start kicking in the rates, and all of a sudden the economy starts to fall off the cliff, right? And so the difference between those two things is that the economy is huge, noticeable, and irrefutable. That's when, quote unquote, we'll finally lose faith again. I mean, folks, these Fed officials do not have magic, balls. I mean, they try their best to read just like anybody else with the econometric model, but they don't have the ability to forecast with any certainty any more than you or I. They got a lot of data, they have to interpret it, there's a lot of interactions, and now with all of this intervention that has taken place, there's all these unintended interactions that we haven't even really considered yet. So when you take all those things and put them together, it's much more difficult, I think, to measure what's really happening or what's going to happen as a result of all the stuff that has already happened and continues to happen. So that to me is when this market will take a hit, when we finally reach the point where the market no longer believes that the Fed really does know what it's doing. If and when that time comes, we'll see a hit. Otherwise, equities would want to just keep going up, right? Well, I'll take it one. I'll take that back. There's actually one other thing, right? Because the equities really depend on earnings. If we start to see earnings hit, that also will have an effect. But so far, earnings have been, there's enough slack in the accounting rules that you can get by for a quarter, 2 quarters. They always got a little kitty somewhere. So, I've been talking about the dollar lately, and the dollar strength is going to affect the bottom line. Well, I think we'll see to some degree that washed over, and for the most part, you'll probably see it the first quarter next year, not so much this year. I'm sure there will be some companies that talk about it, but I don't think you're going to see a slew of companies come out and start telling us that the dollar is affecting them this quarter, because it's just started to. Next quarter is when you really will start to see that, if in fact this dollar really does start to take off. Okay, so that's interest rates. That's, and I could do that on any of these. I mean, it doesn't matter which one we look at. I mean, if we look at, let's go take a different one, like high quality corporate bonds, which is one I like to watch. In this particular case, you've got a big sell-off, right? Again, 120 down to 117. That's $3. $3 in this particular market. That's 2.5% or so. It's not huge, but if we look at the weekly, and this is not showing there, it's not showing any signs of holding yet. If we look at the weekly, we're down here testing, and we're testing it with some pretty good volume. We're going to have 8.3. We're going to have as much volume as we did on the swing point low. If this breaks, what does it do? Well, it finally comes on back down here to the next one, the next volume bar. Yeah, it's not that far away. 116, low of it's 115. So they will find some support here at some point. But at the same time, these markets, when you look at the yields, we've seen the lowest ones we're probably going to see. If I go back, just quickly here, if I go back and I pull up the TLT and I put it on a monthly, we're not going to see those kind of rates that we saw before. We're just not going to quite get there. We're definitely not going to get to those highs. I thought we might make it back up here, make kind of this, you know, triple top kind of an ideal up here with these two big bars, right? But it's really struggling to get up there. Can we still get up there? Yeah, it's possible, but right now it's not looking that way, right? It looks more like we're going to sell down and we're finally putting in some sort of a rounded top again. I do think that over time you're going to slowly see these things fade back down, but it's going to take a while. If the Fed has their way, it's going to take a long while, right? It's going to take a very long while to get back down to this level. So that's bonds. I don't think that they're, even when they start to come down some more, I don't think it's going to affect the economy that much until you really start getting to some higher rates. Where, you know, you can get, what do you get, 30-year mortgages now, it's still at 4%. I mean, 4%, you know, 4% was the best you could get, you know, 5 years ago, 4 years ago. So, you know, it's not gonna matter yet. At some point, when they go up enough, then it will matter. Okay, so I've probably said enough for tonight. Rate-wise, it's going to be an issue at some point if it continues. Right now, it's not. I do think we're going to probably see a bounce here fairly quickly. Market-wise, it's blue skies, folks. They're going to try to break them out tomorrow. We'll see how well they do. They're going to have the volume. If they break them out, you're going to have volume on your weekly, you're going to have it on the dailies, and you're going to have new highs all the way across the board. And that is going to make it difficult to come back in.